Good evening, traders. Okay, today is the 3rd of April. Okay, today is a Wednesday. Okay, so I've taken this trade in mid cap Nifty futures. Okay, so the total profit here is 5,300, and these are the orders here taken. This is the capital amount. This is the capital deployed. 36,000 is the cash. This is the pledge margin, meaning I pledged a certain amount of shares. So basically, this is what I bought in cash, equity, stocks I bought, and on that I took a loan. You can say where the loan is basically the interest rate is zero. Okay, so this is how you pledge. So with this you can trade basically your futures with a less amount of capital. Okay, people keep on saying that oh, they don't have capital to trade futures because the capital amount is huge. Okay, but here on this basically I used very less capital for this trade. Okay, so coming to the logic, so I will share how I pick stocks and how do you actually trade. Okay, this can be used for your investing purposes. So right now this will be part 1 to this video. So let's jump to the presentation. Okay, how to pick stocks for every cycle. Understand this: markets move in a cycle, always move in cycles. They cannot go up or down in one go. Okay, as if you look at your 2002 markets or your 2008 markets when the bull run was heavy, which is actually happening now also. At that time, if you see the market, there will be times when the market actually pauses. Okay, it goes down or maybe goes sideways. Okay, this is where most of the retail investors or the people, you can say basically us, okay, they get fear. They always fear this kind of moment. Say, okay, the market is going to fall. The news will say, okay, the P ratio is high and all this blah blah blah. Okay, as an investor, we never considered a market to be too overvalued or too undervalued. Okay, as an ideal investor, we want to get into this move. This is called a sucker move. So when the market is going down, we want to be buying into that. Now if you consider this into a context of a daily goods, okay, so let's say you want to buy a property that, let's say, a 1 crore. You will never buy a property which is at 1 crore if it is expensive at that price. Let's say it drops down to 50 lakhs. Okay, something happens at that price. Someone said there are booth or something is there, but you know, okay, the property has value, bro. In next 10 years it's going to go up. Okay, that's when you buy. So you buy something which is cheap. You never buy something which is too expensive. Okay, now, so this is what I say: when you should be greedy when others are fearful. Okay, the people are always fearful when the market falls. Okay, so this is where we buy as your smart investors. Okay, so coming to the method. Okay, so we always want to identify the leaders. Okay, so what has happened all over all these 20 years is people have always tried to predict the next. Always they will say, okay, this is the next HDFC Bank. Guess what? The last 20 years, HDFC Bank has been the leader. Okay, last 10 years, if you go, there will be, okay, the HDFC Bank is going to fall, or this is going to happen, this all this. Okay, everyone was ready to just predict the next HDFC Bank. They'll say, okay, this bank is the next HDFC Bank. But no, okay, this never happens. They are leaders for a reason. Okay, and next thing I want to tell you is, don't try to catch the first or the last eighth. Okay, you never want to. If for knife is falling, will you catch a knife when it falls, when it is falling in mid-air, or once it falls to the ground, then you will pick up? Okay, same thing here. You never try to catch a falling market. If the market is going down, let it fall, bro. Let it fall. Park your money in FD. Enjoy the 8%. 8% is more than enough. Okay, guess what? Most investors don't even beat FD returns in 3 years. Okay, so, and the last thing is, don't catch the last eighth. That means do not try to predict the top. Okay, don't say, okay, the market is topping, so let's just sell my equities. No, 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 we don't do that. Okay, and again, money is the ultimate goal. We do not want to impress your girlfriend or your friends. Okay, and the last thing is practice, practice, practice. Okay, this method, again, it requires skills. Okay, this is no different from other this thing, what do you say, things, so which requires practice. Okay, so coming to the actual method, the criteria for this method is that the market should be in a solid bull run. Okay, we cannot use this method in when there's a bear market. Okay, for this you can use a Nifty 500 to know the overall trend, if it is going up or down. That's it. You can use a monthly chart to see if the market is going up. That's it. Okay, you just need to eyeball. You don't even need to know about the candlesticks. Okay, nothing. Okay, just eyeball the market. If it is going up, okay, it's a bull market. If it is coming down, it is going down. On what chart? Monthly chart. The time frame is monthly. Okay, so once you know you're on a bull run, that is your context. You see the market, you just observe the market for the next 1 or 2 months, whatever is the time frame. Okay, and you see when the market starts to go down. Okay, at this time you'll see all over the news, okay, the market is going down, baba, it is falling, everyone sell your stock, this stock is too overvalued, the P ratio is too high. That's what we told you. This they will tell you after everything is over. They will never tell you, okay, the market is going to fall in the next 2 days, you will sell. No, they will tell everything when everything is over. This basically creates your fear in the market. Okay, this is how it generates new liquidity. Okay, this is called the Judas swing, the sucker move. Okay, when it gives you sign of going up again, we buy, we strike, and then we ride a bull run. So you want the market to go down to go up. So this is the visual representation of the strategy I wanted to tell you. Okay, the context is bull run. Okay, the market is in a heavy duty bull run. Okay, at this time you will see the sucker move, the market will start to go down. This is where everyone is scared because they have got at the top, the pickety top. Okay, this is where, this is why I always say you try to avoid a market. If you do not have a good entry, you never try to buy into the euphoria. Okay, when the market starts to go down, there will be signs in price which will show you, okay, the market is going to go up. Okay, which I have shown here. Okay, we wait for the signature in price. The signature in price is a market structure shift or an inverse head and shoulder. Now again, if you have never heard about this pattern, don't worry, you can always go to Zerodha Veracity. There's an app. Okay, on the app store you can download it. It's for free. Okay, it is basically enough to cover most of your basic information. You do not need to pay a single penny for it. Okay, coming to the pattern, this is the pattern, is inverse head and shoulder. But a very first important thing is you need to know the context. Now, how to identify the leaders. Okay, coming to the leaders, this is based on the Dow theory. This was invented in the 1800s, again 200 300 years ago. The stock market has not changed ever since. Even though it is digitalized, everything is fast, there is more news. In fact, it has actually become better because there is the news which fails very fast. It's easy to basically make a bluff. Okay, so when the market was going down, when the market is going down, we identify stocks which are not going down. Okay, these are called the strong stocks. Okay, someone is so eager, or you can say the smart money, or you can say the con man, someone who's controlling the stock. He doesn't want the stock to go down because he is just buying into the down move. When it is falling, he's buying. When he's buying, that's the reason that it is not going down. Okay, means some big money is buying this stock. Okay, this is so. How do you mark this on your charts? So this is called a divergence. As you can see, in the down picture, you can see Nifty 500, Nifty 50, mid cap 150. You can use any chart. Okay, for this. As you can see, it is going down. You can see with the visual representation with the orange arrow. Okay, and you can see the upper one. Okay, chart where the stock is not making a lower low. Okay, something is off. Okay, when the full market is going down, this stock is not going down. Okay, something is happening. Okay, again, you do not need a chart for this. You can even use a price. Okay, so let's say you mark out you note the price on 1st March. Okay, Nifty stood at 1000 rupees. After another month, Nifty came at 500 rupees, so it has dropped 500 points. Okay, now you select a stop, let's say ABC stock. Okay, it was around let's say 2000 rupees. Now technically it should also drop something, at least it should at least drop 1000 or maybe 1500, something it should drop. But no, this stock is actually 2100. It is not actually moved much, but no, it is holding its gains. Okay, this is where you know something is off. Someone is buying this stock. This is called a divergence. This is called a clear-cut divergence or according to my terms and ICT's term, it's called an SMT. Okay, so this stock fails to do this, signifying strength. Okay, this is not difficult. Okay, your job is just to compare the dates at a particular time. If there is divergence, you observe the stock closely. Remember, the only green signal is when you have a inverse head and shoulder pattern. Okay, when you have a market structure shift, that is when the market first needs to go down. You observe the broader market, then it needs to show signs of going up. Okay, that's where you see for SMT in individual stocks, and that's when you buy. So examples are here. You can see the context. The context is going up. The bull run is confirmed. Okay, this is the context. Then we can see this is the daily chart. Okay, the previous one is a monthly chart. As I told you, you need to have a monthly chart for your reference, for your context. Then we go to a daily chart, which most investors use. As you can see, the market is going down, and suddenly, maybe on it was during November. I remember this. Okay, around 26 it was 26 October actually. You can see the blue circle I marked. Okay, this is where you can see suddenly the market is going up. It basically goes above that. Okay, as you can see on the right side, there's a reference image for your theory purpose, and there's a practical on the left side. That's where you get a shift. Okay, this is your broader market. Now you go into individual stocks. Okay. So this is where there's a little work involved. Okay, again, this you can do every weekend on a Saturday or a Sunday. You do not need to do this every day. Okay, investing purposes should be done on a weekly basis only and a monthly basis, okay, not daily. Daily is more of swing trading, and it is again, it is the effort you have to put is more as compared to the gains you get. This is the same chart on the line chart. This is what I showed you. This is where you get a shift. Okay, this is where you now your third step is to go into the individual stocks and see for divergence. This is your Alchem Labs. As you can see, when the market is making lower lows, the Nifty chart is below. This guy was not making lower lows. Something is off, bro. Something is off. Let's say you buy this stock, you get a staggering returns of 43%. I mean, that's amazing. I mean, not even FD returns can make 43% in maybe 2 months, 3 months. Okay, again, you do not need to catch 43%. You can even catch 30%, 20%. I mean, that's a respectable amount, right? Enough money. Okay, the next stock is Interglobe Aviation. It's a airline industry. Again, you can see SMT is there. You buy it, you get good returns, 42%. Still, it is rising. Again, there's an SMT. If you can see, there's a recent SMT also, if you can see. Okay, now I will like to show you the practical examples which is happening right now. Again, this is not financial advice. You should understand that you should consult your financial advisor for this. This is not a buy or sell advice. Okay, nothing of this is a buy or sell advice. This is only for education purposes. Okay, so as you can see, this is a midcap 150 index. Okay, I like to use midcap 150 better. Okay, broader index. Yeah, so as you can see, market was doing something bullshit here. Okay, this was the context, going up, going up, going up, going up. Okay, this is where you get the down moves. Okay, this is where you're all initial. Okay, the mid cap is all we are doing nothing. This, that. 5% it drops on this day. Everyone is here. Everyone is selling into this move. Okay, this is again the sucker move. This is the Judas move. Is what I'm saying. Judas, if you know from Bible, is basically the one who cheated Jesus. That's your sucker. That's a false. Everything is he lied. So this is a shift here. This is a shift. Okay, so it's on a Friday. Okay, again, you do not need to catch this TPD down. You do not catch. Even if you catch this here, more than enough. More than enough. Okay, this is where you, let's say you caught. So this is on a Tuesday. Okay, you can again on a Friday, Saturday. You can just Saturday on a Sunday. You analyze this. Monday was a holiday. You can just put an AMO. AMO is after market order. You don't even need to be in the market during the live hours to place an order. You can do everything off market. Let's say you place here. This is where you write. Now your second step is actually to go into the individual stocks and actually identify where you get your SMT. Okay, I'm not going to show which stocks have shown SMT. Again, that will be like a buy advice, but I have picked some stocks based on the same strategy. I got somewhere here. It was here. I saw this on Friday, and on Tuesday I put an AMO here after market order. Here I'm not even this thing breaking. Here I put an order. Okay, the most down bar part. Okay, is where I bought. Okay, so right now we have crotch all-time highs. Again, this is what I call, this is called a sucker move. It has to go down to go up. Okay, nothing has changed all over these years. It's the same damn thing repeating, because human psychology is the same thing. People don't change. People never change. Okay, that's it for today. I hope you have a good day, and I hope you will look into this and try to increase your knowledge. Again, the app you should be using is Zerodha Veracity. Enough, no need to buy any course. That's it. Okay, have a good day. Bye.